Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's video I wanted to take a detailed look at Home Depot because, you've got a stock that's made a new all-time high, and those can be very fun to play. So when I come back to the weekly chart, I don't see anything that would keep me out of it. To some degree, I always like to point out, if you've got a previous swing high to swing low, make note of where it's coming up into extensions because that can be a dangerous time to get long. Well, in this case, it's been so micro and just so steadily moving higher that I still think it has upside potential to it, and I don't see it as being too extended. When I bring it back to the daily chart, this also helps kind of back that analysis for several reasons. The first of which is that symmetry is still holding. So when we look at these previous declines, and I'm just going to run these live to kind of show you how you can look at this stuff, what you're trying to decide is the correction that we're seeing now out of line for the personality of what this stock has done before. Just essentially you're saying what has the point value losses been and how do they relate to what's going on right now. Just those two most immediate swings shows you a perfect zone where it came down into support today. I'm not wild about that parabolic SAR reversing, but I'm still going to err on the side of the buy side in Home Depot. Once we've found symmetry and we're vouching for that to be our setup area, let's say we've seen a buy trigger and we want to get long this. The best way to find your targets are to run the 1272 of this move. So we can see that the next big area of resistance that it needs to clear is here at 105.30. Once that's cleared, it's going to have room up to 109.27. Now the most basic way of looking at this and how I feel most people would start off with the squeeze is to say, okay, let's go out here looking at these February calls and let's just buy some. Let's get long and take this to the buy side. I think a little bit better way of looking at it is to say, what is the expected move into February? Well, it's right at about $5. Okay, if we take the expected move of $5 and tack that onto the current price, that's going to take us up into about 110. Well, 109, 110 is right where we find that extension. That's a perfect place to look at starting to structure a butterfly. The 110 call is trading for 30 cents, so that's a great contract to sell. And if we were to do this spread $5 wide, it's going to run us about $1.23, gives us our break-even price that is just a couple dollars higher than where we're trading now. But these strategies just tend to be much more forgiving than something like outright directional calls. Landing them with the extensions can really prove to be lucrative, when you can land them there at expiration because you're maxing out the long call, maxing out the short call with leverage, and that's a great way to look to participate in that one. So I hope that helps. We'll see you guys at the next free video.